Global equity markets are currently performing well, with the S&P 500 and Nasdaq approaching new record highs. To break it all down, let's head to Sydney. We're joined by Steve Gopalam from Skander FX. So much good news, obviously, for the markets. What's fueling it all?
Good morning, Aaron. Thanks for having me. Yeah, exciting times. It's risk on back in the markets. We're seeing a surge in obviously risk currencies such as Aussie and Kiwi. It's on the back of what we heard from the Fed. They're probably going to be applying a pause in terms of the interest rate cuts. But they've left the door open for September. So markets are now buoyed by the fact that, things are all good for risk and for equity markets.
Wonderful. So the current rally of the S&P 500 and the Nasdaq, how long do you think it will last?
As long as Trump doesn't change his tune. Right now, it's on the back of what there's the markets are front running. They think that there's a Fed rate cut priced in. We heard from Fed President Waller, who's probably expected to be either the next Fed president. He's of the view that we should have a rate cut in July. But from the statement itself, most of the members I have seen are voting for a rate cut later down the year. So there's a lot of rate cut being priced in. That's why the equity markets have been rallying.
Let's talk about that. The Fed Governor Waller's suggestion, as you mentioned, of that July rate cut. What do you think that could mean for the markets?
Well, markets don't like any sort of ambiguity, and Waller's statement over here, where he's come out and said that a July rate cut could be well deserved because inflation is a bit relaxed at the moment in the US, but those job numbers are not very, very supportive of his statement. My view is that maybe the Fed probably won't be cutting rates in July, but definitely markets are pricing in a hard rate cut coming towards the end of this year. So September, probably September, December is when more rate cuts have been priced in.
Wow, pretty extraordinary stuff. We'll see whether it happens. Obviously, last year we were expecting 4 emergency rate cuts or big rate cuts from the Fed, but things can change pretty quickly. Let's talk about Trump's surprise tariff on Brazil that he's announced this week as well. Why don't you think the markets are reacting to this one like they have to Europe, to, I guess, China as well? Why not Brazil?
Good one. Good way. I think it comes down to the fact that probably this is not to do with trade protection. It's probably because of something to do with personality clash over here. I think it's if you're not friends with Trump, you probably get threatened with the tariff. So that was a bit of shock to the markets. A 50% slump on Brazil. They won the 10% basket. But in saying that, I think the Brazilian president has come out quite strong. He said that it's going to be the sovereignty of the Brazilian people that's going to be the guiding policy move forward. So I think the biggest loser in this whole equation is probably going to be coffee drinkers, and I think when I was reading it last time, Brazil exports a lot of meat to US. Right, so it might be good news for people across the Tasman, probably New Zealand and Australian dairy farmers who supply meat. Maybe we might be able to bridge that gap, but coffee price is definitely going to go up through the roof.
Well, that isn't good news. It's already $5.50 for a small coffee here in Melbourne. How much are we willing to pay, particularly if you're like me and you have a few in the morning?
100%. Don't even ask. If you go to Perth, I think the average cost of a coffee is almost $9 for a decent latte.
Gosh, that's all those fly in, fly out workers. Let's blame them. Now, Bitcoin is soaring again. How much of this is due to political tailwinds and also some interest from institutions?
Yeah, I mean, my take on Bitcoin is that it has now slowly become the proxy for capital inflow. And when there's a bit of risk in the market and people aren't sure where to hedge their bets, there's only so much gold they can put their money on. And seeing demand from institutions such as BlackRock and also really prestigious hedge funds and everyone, they're piling into Bitcoin. No matter what you hear, the story of Bitcoin, look, I don't 100% understand the whole Bitcoin concept, but from what I can understand, people are diversifying into the market. And when you see global banks actually working a way through to get their holdings into Bitcoin, that tells you that they're seriously considering it as an asset. So another couple of years' time, I think Bitcoin would probably be part of every householder's portfolio.
Which will be really interesting to see what the impact of that, because it's all meant to be free, it's meant to be open, but there will come a lot of regulation, I would imagine, if it's in everyone's household options. Let's talk about the Aussie dollar now hitting multi-month highs. What are the key drivers behind it?
few interesting things happen. Obviously, one is I'll probably put my hand up and say I was wrong because back when last time when we met, I thought the RBA was surely to cut rates. But hey, I'm not the only one. I had the other banks calling the rate cuts too. So, look, RBA surprise announcement, understandable. Why would they want to go and cut rates when economy is doing just fine? I mean, obviously, inflation is still working towards the bandwidth, but hats off to RBA Governor Michelle Bullock. She did not confide into the over-leveraged householders' scare tactics. She stood firm. She said no rate cut coming in from the RBA in July. What that also means is that probably we might get some bazooka rate cuts towards the end of this year. Now, that all is based on what's going to happen globally, right? So global markets and function of whatever Trump's trade war tactics happen. But in a nutshell, Aussie dollar has been benefited from this pause in RBA. We're seeing it break almost. It's touched 34-month high. Sorry, 34-week high. Now it's at 66. It opens the door for new chats. I mean, for importers,
Yeah.
this is the best time to consider hedging. This is the best time to run market orders. Don't be relaxed because an opportunity's
Yeah.
come.
All
And you
right.
want to take high over here.
All right. Let's get a coffee and celebrate if we can. Steve Goplan,
Please.
appreciate your time as always. Thank you.
Thank you so much for having me today. Bye bye.